Hi, my friends. This is Ron Pippin with the Pippin team at Cardinal Financial. And today we are going to talk, guess what? We're going to talk about mortgages. Of course, we're going to talk about mortgages. What we're going to talk about is we had some questions come in about what's the difference between FHA financing and conventional financing. By the way, if you have any questions, drop those into the chat box right below this. So if you're and we'll answer those right now. We'll answer those live. So, but if you have a banner up there that says "Drop your questions in," can you put that up? I've got my producer in the background, and so he'll put up a banner that says there you go. He's got it on there. Good job, Butch. All right, so FHA and conventional financing, there are some differences. The big difference is, so FHA is a government-backed loan that it has some relaxed guidelines. So if you have some credit issues or if you have higher debt ratios, FHA is really a great way to go because it's really relaxed. It allows you to get into a financing without the stringent requirements that conventional has. It also has some great rates. Now, the downfall of FHA versus conventional is that FHA has what's called an upfront mortgage insurance fee, and it's a little bit pricey, and where conventional doesn't have that. So you add that to the loan. So let's say you buy a house for $300,000, or let's say you have a loan amount of $300,000. And then you have that, if you have an FHA loan, then they add that mortgage insurance on top of the loan. So instead of a $300,000 loan, now you have a $315,000 loan because they added on. And don't take what I just said, the $15,000. It's probably less, but I'm just throwing that out because I didn't run numbers before I came on here. So let's say it's $310,000 or $15,000. They add that on top, so your loan amount already starts out higher than what you think it's going to. So that's one of the downfalls of FHA financing. But the good thing is if you have any kind of issues, debt ratio issues, or credit score issues, you can get in a little bit easier. So on conventional financing, the advantage is that you can remove the mortgage insurance when you have that 20% equity. So once you have 20% equity, you can remove a mortgage insurance on conventional. You don't have that option on FHA. It's life of the loan. Now there's exceptions to that rule with FHA. So if you have a shorter term, 10, 15 years, or you put a lot of money down even on an FHA loan, then you can remove the mortgage insurance at some point. So there's some differences on FHA and conventional financing. So I know mortgages, kind of boring stuff, but if you are looking at mortgages, it's good to know. By the way, check out the hat. If you guys want one, let me know. I just might be able to get one to you. So anyway, so yeah, if you have questions, drop those in the chat box, and we'll answer those for you. I know that there's been a few of them that came in. So Butch is going to let me know what those are. It'll drop up here on the question. So drop those in. Is there an advantage of one loan over the other? Well, I kind of went over that. So the advantage of FHA is relaxed guidelines. You can get in. So like let's say you have a 580 credit score. You can use FHA financing where conventional, you can't. It's like a 620 credit score to use conventional, but conventional is very, very sensitive to your credit score. And so your interest rate is very sensitive to the credit score. So on conventional financing, to lower your score, the higher your rate's going to be. It's a little bit that way on FHA too, especially when you drop below about 620, you start get into the 500s. I mean, I can do FHA financing down to a 520 credit score, but you're going to have some money down and your interest rate's higher. So just know that whatever financing you're going to use, the lower your score, the higher your rate. But FHA can go to a lower score and still get you financed conventional can. Now, on the flip side, conventional can be, if you have a good credit score, then conventional is by far the better way to go because you're going to have less mortgage insurance, and your payment overall is going to be less. And then in the long term, also your mortgage insurance can be dropped. So it really depends. So if you say, was there an advantage over one over the other? Yes, but it really depends on your scenario. So call me. Let's talk about it. I will run you a side-by-side scenario with multiple options so that you can see right side by side which one is the better one. It makes it really clear for you. It just makes it so much easier. I'm not going to send you these sheets that just has all this stuff all over it because it's really hard to compare sheets. So I send you an analysis side by side so you can see that. Oh, hopefully that answered that question. But what other questions do we have coming in? Do any of these types have extra closing costs? No, not really. There's not really a lot of difference in closing costs between the two, except for FHA has an upfront mortgage insurance fee that's added to the loan amount, and conventional doesn't have that. So I guess there is, yes. So FHA does have a little bit more mortgage insurance in closing costs. So yes, hopefully that. I first said no, but yes, FHA does a little bit. And can you switch from FHA to conventional? I don't know what that question means. So can you switch from FHA to conventional? So if you're talking about during the process of getting a loan, then yes, you can switch from FHA to conventional. So here's a good scenario. So let's say you're buying a house and maybe you have a lower credit score and you pay some debts off or something, and all of a sudden your credit score rises, then we can flip that from your FHA to your conventional before the loan closes. So yes, we can do that. Now, so you do that another 6 months or year down the road, you can't just flip from one to the other. You have to refinance it to go from one to the other. Hopefully that makes sense. So yes, in both cases, yes, you can. If you close on one, you have to refinance it to get into the other one. So here's another example. If you have an FHA loan and you want to get rid of the mortgage insurance, you're probably, now, like I said a little bit earlier, you're probably going to have to refinance it. But like I said a little bit earlier, that there are a few exceptions to that rule that you can't get rid of the mortgage insurance. So there's a few exceptions where you may be able to without refinancing it. But by and large, most of the time, you're going to have to refinance from an FHA loan to get to a conventional to drop your mortgage insurance from your FHA loan. So there's that. Any other questions that's come in, Butch? I can see you in the background if you want to just come onto the background screen. Oh, or you can come on.
I guess that's all.
Okay. All right, cool. Thanks, Butch. I didn't mean to have you come in here. I just was going to see you in the background, but cool. Anyway, that was Butch. He's my producer for all these things. He's like my guru, podcast, video, meme editor guy. So he's awesome. Anyway, so hey guys, if you have any more questions, give me a call. Call me, text me. My phone number is 801-628-7667. It's right there on the screen, scrolling across right there. And again, I look forward to talking to you. Call me, text me, and we'll see you on social media. We'll see you.